All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle live pre-New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we do an awesome job of participating and engaging for today's session. If everybody can hear me loud and clear, feels like I've been away for forever since the issue yesterday with my internet, but I'm glad to be back. Drop me a one if you can hear me and you are all set and ready to go. All right, I see the ones coming in. I appreciate you all hanging in there with me. I know I had to cancel the sessions at the last minute yesterday. I had to do things from my phone because my internet was down here at the house. So I am due for a new modem, but my current one, I've got it back up and running for now. So time for an upgrade. So my apologies again for yesterday for having to cancel the session. So let's get going because we got a lot of things we want to cover this morning as we look to close out the week. So we'll take a look at the Forex Factory, and then we can see here today, Thursday, we've got advanced GDP coming right up at 8:30 and unemployment claims. Okay, so that's going to be a big one because when you read a lot of reports, listen to a lot of the rhetoric, there's the labor market seems to be cooling down. So here in the U.S., so we're going to see exactly what those unemployment claims say today, and then of course that advanced GDP checking that economic health for the quarter, advanced GDP for the United States. So we have the opportunity for some volatility this morning. Then we got advanced GDP pending home sales, right? Report comes out. So all gauges the health of the overall economy. And then 7:30 Tokyo Core CPI comes out for Japan. That's going to be interesting year over year as we're seeing if they're going to change anything. What if anything can drive them towards a possible shift in their monetary policy, which has been ultra loose in Japan for quite some time, especially with new leadership. So we will see. We got an unemployment rate, a lot of stuff coming out at 7:50 p.m. Between 7:30 and 7:50 p.m. for Japan, retail sales, industrial production. So we shall see. And then we got at 9:30 just for a couple hours, right, running for Japan. BOJ outlook report, and monetary policy statement, and the bank rate. So we'll see what's going on. So busy morning, busy evening with Japan. So make sure you keep your eyes on that as we're not having an Asian session tonight. So if you happen to be around your charts this evening, take a look at the price action, see what happens with those yen crosses. All right. Any questions on that part from anybody? Okay. So expect some potential volatility at 8:30 with the U.S. data, and then later on this evening. Okay. Good. All right. Thanks, Brian. All right, so take a look at trading economics, Eurozone economic sentiment, weaker than forecast. So we continue to get some positive news, positive data out of the Eurozone. We got positive data out of Germany yesterday, which is the biggest player in the Eurozone. So we continue, right? Listen to the rhetoric out there, continue to those traditional data points that people look at, continuing to get mixed signals. We know that we've got some positive earnings reports coming out that have come out yesterday, especially like tech sector with Microsoft and things like that. So some positive signs there. And then I believe we have today. Let me see if I can catch that in regards to earnings was coming out. Meta, their earnings are due out today. All right. So we know that's a major tech sector company. So we shall see, okay, what goes on with that, as that all plays into the Forex market as well. So that's a big one coming out today. So yeah, I think Apple in May. I have to check and find out when that earnings report comes out. They did just have massive layoffs, right? That So when you put your investment hat on, like how does that impact, right? Those layoffs, those you sold your Meta off, Joy, right? I think I think they're gonna come in strong. The layoffs, right? That's an instant bottom line impact. So if you put your investor cap on, you know, that could mean something totally different. I think they're gonna come up uh, pretty big. Let me see. But I think, or did they come out yesterday? My internet went down. I was busted for part of the day yesterday. Let me see. Profile digestion result. Oh, they can't. That was yesterday. Amazon is the next one. So let me see. Uh, Facebook parent has returned to Facebook parent Meta foreign platform. So pretty good. Revenue moved higher, 4.1%. Yeah, I've got to get all caught up on this. That's decent. First quarter results after the close. So they reporting after the close today. The Fed meeting is in May. Services. Okay, I gotta get caught up on this, everybody. That's positive. That's positive. I remember y'all talking about that at the Beyond the Bank playing options. Yeah, yeah. They couldn't find the they couldn't keeps turning off and on. Yeah, but we got a good correction on Bed Bath to Beyond. We got a good correction on that before it turned over. We got a nice wave on that from the boost that it had before. So short term, that's a short term play on that was pretty decent. They couldn't find their way out of the deep hole they were in though. Yep. Yeah, I was playing options. Oh, you were playing options. Oh, if I was playing options, I would have made big money shorting. Yeah, it was a decent little correction for the upside, a decent pop. It found a high price, and then it just tailed off. Carolyn, I remember that too. I remember Joy, are you still holding I know I am like Target and Walmart? Remember when it made that huge correction? We all spotted that on the technical chart.
I'm still in Walmart. I don't think I ever made it for Target.
For Target, yeah, that Walmart was huge. I'm like, Walmart's not going anywhere. That when they had that bad quarterly report that just fell off the face of the earth for a minute, that was a good pickup. So yeah, that my bad, y'all. I thought that was upcoming. That happened yesterday. I'm all out of sorts. So that's good. That's good for the tech sector. I know some other companies have reported, but I didn't pick up on the Meta for some reason. All right, and then Amazon reporting after hours today. So see what happens. All right, so that's enough of that. Right, back to the Forex. Take a look at the DXY still bouncing around. Right, still bouncing around. We need a catalyst, as we always say. We got reports coming out at 8:30. See what type of reaction that we get. But you see, that's just moving sideways. It is what it is, right? So I want to take a quick look at some of the pairs yesterday. This Euro NZD broke my heart. Still in play. When we got that positive data, but I didn't expect it to move the markets as much as it did. So it just stopped me out. Typically, when I'm trading these swings, oftentimes I'm gonna put my stop at the D. But I knew those reports for the Eurozone was coming out yesterday, so I didn't want to put it at the D extended. So I put it just above the high resistance at 182.06, and you can see it tap that level and then it dropped. So that's a bummer. But it's short again, those sorts of places. So maybe keep an eye on the lower time frames. Maybe we get a correction and then a move down. But we're right here in this zone here that is reactive. So it's gonna be interesting to see what happens. I was looking for some profit taking, which we see it, right? It was just early. So it took profit just after right? It had a little sell-off just after 180.20, which was beyond the stop that I had set. But then we got a correction. That was a pretty decent correction too, over 100 pips. So continue to watch that. This is a key level, past resistance becoming future support. We're getting a reaction now. Maybe we get back to retest 180.20, but that's a longer term play. So if we get a decent pullback and it looks like it wants to hold up to that 180.20, may take another crack at it. So that is the Euro NZD for right now. Any questions on that? No. All right. All right. So that was a larger swing. We don't have a 382, right? That's the sweet spot in the zone, and we got a decent initial reaction. But then with that fundamental data came out to the positive, so it dropped off pretty good after moving higher. It came back down 81 pips and then corrected to the upside. So hey, that's the way the game goes sometimes. But I'm continuing to keep an eye on that because it's sitting pretty high, right? So we know, hey, it's either going to that D and gonna hit that reset, or we're gonna get that correction to the downside. So continue to monitor that when we come down to the 1 hour, right? And you can see where we are, right? It's testing this zone. It's starting to form support here, right? Got stochastic in a buy zone. So that you're gonna have to wait on, okay? It's fit to the downside. So that's a beautiful move there, but I was out at that point. I had my stop. I had my stop right above 180.20. So the game got me. But we'll see. So now with this D extension hit, right, we're expecting a new fib, right? If that's the low, if that's gonna be the swing low, we have to wait, right? 7 o'clock and then 7 to 8. So for that to be a confirmed low, then potentially a move up. So that could be a play later. We'll have to wait and see. That's a big move. So we'll wait and see on that one. The other one was the Euro NZD. I mean the Euro JPY. Take a look at that. Okay. Now this one seems like it's kind of moving ahead. Similar type of price action. You all see that? From the stop, right? It's around that D extension. So that one I kept at that level. And we're pulling back. Let me see if I can, what does that look like on the 4? Yep, that's what I thought. So tracking this off the 4, you guys see that wave. So it looks like this. Do it like that. And we're going to use this larger wave and pull it down like so. Because it made, right? Talked about that lately. It made a larger correction on the higher time frame. So it took out your smaller waves on the 1. So higher time frames control the lower time frames. So we're going to take this bid and we are going to move it down like so. And we're going to pull these out. Oops. Like this. See? Back. So there's the pullback. Right. To retest the backside of that trend line. Okay. And that stop is pretty much in the same location. Right, if you're playing at above the A. So there's the break and the pullback, inner outer trend line break. So it moved down pretty good. Is anybody playing this one? Anybody active in this one? Because it made a solid move back to the downside, right, after the drawdown. Nope, nobody in it. Okay, so there's the pullback to the backside of that trend line. So if because we didn't quite get a 786 retracement, if this makes a move down, your D extension is right at TP1 on that one. All right, so even if you're not playing it, Study the price action, everybody. See what happens. Okay. All right. Is anybody in anything right now? Is anybody trading?
My oil activated last night.
Your oil activated last night? Okay. Okay.
Yeah.
Playing an oil play?
Yep,
You
on a 4 hour.
you selling or you buying it?
Buying.
You buying? Okay.
And
Okay, I'm taking.
I bought UJ too.
Okay. Bought UJ, Janice still in the Euro USD for the buy. It started to make that move. We had that we had a discussion on that in the Discord for on that 5-minute chart. We were looking at that Euro USD and it picked back up to the upside. So still in the Euro USD for a buy. That's good. Carolyn, Euro USD for a buy. Okay. Good. Now keep in mind, right? We've got how large your target is. We've got data coming out for the US at 8:30. Okay, for 8:30. So just be aware that you may see some volatility with that setup. Okay, so that's the Euro JPY. There was another one. There was actually some lower timer. I couldn't. Because my computer was down yesterday. I couldn't get them posted. You gotta move fast with those. Euro Swissy is finally moving. I know. You gotta you're trying to do markups for like 5-minute charts, stuff like that. You gotta move fast. Sometimes you can't get them posted, but computer was down yesterday. So there was another one that was playing to the downside, was this pound NZD. Pretty good. So here's the 1 hour setup on it. And it's looking like it's trying to find some support in this area. But you can see it's here it is. It's made a good move out of that zone, right? So that's a 1 hour 80-20. My apologies, I couldn't get it posted yesterday for the group due to the issues. So you can see, look how we got that bounce. Okay, and now we've made this is a decent move out of that zone, right? It's 150 pips. Now we know we set up these long-term targets to the 382, but what you all have to remind yourself of, okay, what's your goal? What's your plan? Do you have like, hey, I want a certain amount of pips per week, or however you do it? Because for some people, a move of 100 pips might be good enough and you lock it in profit at that, right? Or maybe you're taking some of the position off and adjusting your stops to break even or putting it in profit at that point. So that's another skill, right? That you work to develop. Okay, that you work to develop is that trade management skill. And that's why we always say it takes time, right? We've got our technicals. You want 100 pips a week, Carolyn? Okay. Right. So you set your trade plan up against that. So that also comes into play. Which time frames do you want to trade for that? Right. Do I want to play smaller ABCDs to try to get to the 100 pips? On a 15-minute, maybe 1 hour charts for 100 pips. How do you want to do it? These larger time frame moves, even your 1 hour, which are bigger moving pairs, can take some time. So if you're 100 pips a week, am I on my 5-minute charts or my 15, and I'm taking 5 trades at 20 pips a piece? How does that look? Things that you want to imagine in your head, okay, as you think about that and you think about those goals. So just some things to think about for everybody, okay? But you guys can see the price action that we follow. We got the opportunities there. It's just a matter of getting your trade plan together. That's where you hear Ryan talk about it all the time, and how you want to attack the market. Okay, we're showing you where the price at, where price is reacting in certain zones. How do you want to play it? Okay, how do you want to play it? What does that look like? Okay, so that's a pretty good move down. So you have to know that if you're holding this long term, eventually after 100 some pips, you're gonna get a pullback. You have to decide whether you want to, maybe you go down to like your lower time frames, like here how I'm watching this on the 15. Okay, just move. So you can see that's a clean inner to outer trend line break. Same stuff over and over again, everybody. Right? That's why if you get the basics down, the basic, just get the foundation down, right? Everything else will start to fall into place in regards to your risk management. So, you know, is there a possibility that this pull, we already got a 382 on this 15, is it going to pull back, or is it just so impulsive that we're going to continue down to this extension and then continue to work our way down to that TP1? Okay. So you have to decide how you want to manage the trade. If it pulls back to a deep level and it looks like it's forming a high at this 203 for resistance, right? Past support becoming future resistance. Do I want to add to that position? Right? Is it, you know, if my directional bias is to this TP1 and to this 382. There's some things you have to think about when you manage these trades, right? A lot of ways to skin a cat in that sense. Okay. All right. So this is right on that four is making that correction. So let's talk about some things. I had a question. And you can, it was around the power fib. And somebody asked me the question like, well, could I buy, what if I what if I bought at every level? And I know some people who do that. They pick their levels out. Again, they have a trade plan. They have their risk management, because a lot of times people will see this bounce off this 236, and we've seen it, right? And it'll just skyrocket like on a Euro NZD, a Euro JPY. You're like, well, that took off that 236 to this 118, 127 zone for like 400, 500 pips. You know, some of those larger moving pairs. Let me look at the this Euro, was it the Euro NZD or the Euro JPY? One of them. But you can see how the market's just accelerated. So here, okay. So to get to this point, this came off of a 236 and accelerated, okay, to the upside. Okay, buyers in control. Bears took control for a second, but only for a second, and then it took off for 500 pips. So people say, hey, well, you know, I want to take advantage of that. Put it in your trade plan that you take trades at that level. How are you going to work your stop, right? Then the question came, well, it's like, well, if my bias is bullish, and we've covered this in the past about the fibs, right? What if I took trades at the different levels, right? And as long as it stays within the AP boundary and it doesn't take out the A, has no choice but to go my way, right? So you're taking it like, typically I'll take it at the 61.8, 786 in my green zone, and then let it swing. But can you break up your positions and take it at higher levels and look for the swing? Yeah, you just have to work out your risk management on that. Like, what are you risking? You know, are you taking on more of a risk? Are you saying, okay, for this total setup, I'm going to risk 3%, and then you're going to break your positions up? Maybe it's depending on the size of your account, right? Some of us may have larger accounts, some of us may have smaller accounts. It's fine. But if I'm risking 3%, do I break that up at each level? Maybe it's 0.01, 0.01, 0.01, and then I let it swing, right? So I've got buy limits, and I let it swing and take them all in, you know, and swing back to the upside. As long as it doesn't take out this A, it has no choice but to go my way. Can you do that? Yeah, you just have to game plan for that. And it has to make sense for your risk management plan, okay? Because you don't want to do that and then blow up, right? If all your levels get picked up and your A gets taken out, you need to know, if that happens, I'm out of max 2%, 3%, right? 3%, I know I have to lose 33 of those setups in a row to blow my account. So you still have to manage that trade. You can't just calculate your risk from your gut if you're doing that. All right. Everybody follow me on that? Yes, no?
Yes.
Okay. Okay. Right. And that's what you could do. You could do that, right, with if you had the Power Fibonacci tool, which they still need to get back to me. Because I do actually have that option, right? So you could set it up. You can do it manually by setting your buy limits, right? You come into, for example, on this, you come into your weekly ritual and you say, oh, okay, I've got a new AB boundary. right? So you can say, hey, I want to take a position at a 236. So new AB boundary. This price action here hasn't occurred yet. So new AB boundary. I am going to set a buy limit at the 236, right? Maybe I want to set it at the 382, the 61.8, whatever, what have you. If it swings, it puts you in drawdown, but you already know my max loss is 3% or whatever it's going to be for that position, right? So you have to be comfortable in knowing that. And as long as it stays within your AB boundary and makes the swing, you're good. So if you do that, you still can trade with the same rule. So say you had a buy limit set at 236 and it took off like it did. You can say, well, I know that what the 80-20 rule is, and it has a high probability of reversing at this level. So maybe I want to, if I get a bounce off the 236, maybe I want to take profit in this zone. Everybody get me on that? Drop me a 1 in the chat. All right? Because we know it has a high probability of holding up in the zone and then falling for a deeper retracement. So you may say, okay, well, I've made profit on this level. I'm going to get out now. Or same type of management tactic, right? I'm going to take 50% or 75% off, move my stop up, right? For example, oh, I'm at this level. Maybe I move my stop below this low. And then if it continues to the D, I'm good. I'm just going to hold it. If not, then it takes me out, but I've made good money, right? So those things, so that's why we say, like, if you see it, technically, when you see it, if we just post the AB boundary, once you understand how it works, all works, you can figure the rest out because you have to make it work for you, right? And I hope everybody's following me on that. Like when you see a new AB boundary set up, it's like, how do I want to play that? Right? That's why we'll post them like that. Like, okay, we'll post the AB boundary and we'll show you a markup with it coming right off the B boundary. Then we'll also show you a markup where it makes a shallow retracement and bounces to the 118, 127 for a potential play, right? You guys know that that's been with us for some time. And we say, hey, but we always say, these are for the counter trend moves. These are the sweet spots for the counter trend. If you have to know, right, from doing your homework, doing your ritual, you have to know, okay, if the directional bias is up and I've made it in my mind that I'm a trend trader and I'm only going to trade with the trend, then you have to have in your trade plan, well, if I'm trading with the trend, what levels am I going to look to buy? So everything comes with that B boundary, which is why we do it, because what it helps you with is making decisions on your own, because that's where the true freedom lies. That's where the true freedom lies. And that's why we post trades as trade ideas. Because boom, here's the new AB boundary. How do you want to play it? These are the options, right? If we post a new AB boundary, like I say, if you've done your top-down analysis and done your homework, the price is trending up. How do I want to play it? How do I want to play it? Okay. If you develop some type of methodology of breaking up your positions and having them pick up on the swing, like right here, you would have cleaned up, right? You would have cleaned up if it took you in at a two. This is drawdown. These are positions they go into drawdown. You have to psychologically be okay with that. Your stop's below the A, but you have to figure out, right? It is a must if you trade any trade, really, but especially this way, this methodology, you have to have your risk calculated, right? That should go without saying now, but you have to have your risk calculated on that and be comfortable with the risk that you're taking here, right? So we see it's been multiple fibs in a row, right? Some shallower, some retracements are more shallow than others, right? Some deeper than others, right? But at the end of the day, that's like 1, 2, 3, 4, 5 fibs where price has continued to the upside, okay? So once you get the foundation down, it's wide open in regards to how you approach it, right? And we can't make that decision for you. And that happens, you become more comfortable with the decision that you make over time. Okay. Any questions on that?
No.
Okay. Yeah. Because that's when trading becomes fun. That's when you trade. Once you get the foundation down, you understand how to do your top-down analysis. You understand this method in which we teach, and this is the method that we teach. Are there different ways to trade? You guys know that there's different ways, right? You got to find the one that's best for you. But this is what we do. This is what we stand by. So once you figure it becomes just fun. It becomes an awesome journey at that point. That's why we always tell people the only way you fail is if you quit. You gotta hang in there and give yourself the opportunity to learn something new, right? And then to ultimately thrive at what you're doing. Okay, so now I want to I need to check something else out fast. Because I was looking at this just this Aussie CAD. It was getting a decent bounce. That's the weekly. It's reacting back to the downside now. Yeah. Off the this was another one yesterday that I couldn't get up because of my internet, but that was a decent swing on the 15. You see how it came into this 80-20 zone up against this 4 hour, and then it just took off. Right. It just took off. It just took off into the zone. Now it's making this move back down. Right. Yeah, on the 15. But anyway, let me jump because we had a couple of minutes to look at. Yep, I'm just about to talk about that, Janice. I was just say one of our team members, Janice, had a great question in regards to harmonic patterns. Okay, and we talk about it all the times. I will tell you all that what I found with harmonics, people know me like, especially when I was in IM Academy back in the day. Most people that know my story, like I was in it. I was already MTI trained. I thought the software was really good, right? Especially the harmonic scanner, right? Bit expensive compared to some other options that are out there, but I thought that was the first time I had to come across something like that. So I'm like, what I knew and what I had learned from MTI in regards to the Fibonacci sequence, I understood exactly what the harmonic pattern was identifying and how powerful it was, right? So that's that, right? And that's that was really the only, I know they had a ton of software that they developed, but that was the only thing that I used. And I just became a specialist in that. You did not, when you didn't understand that, and so of course I didn't, yeah, you kept losing, right? So let me, we're gonna go in today, we're not gonna go through all the patterns, but we'll talk about, for example, like a Gartley pattern. And what's cool, if you all have, so when we get done with this, how many of you guys know that SmartTrader, that's a decent pullback now that Isaac cat on the one. How many of you guys know that SmartTrader has a smart pattern tool? Anybody? You do? Yep. Okay. So one of the things that Ryan and I have been working on is software. Part of it is pattern recognition, right? So that's why sometimes you see his post I heard on the mindset. Was it Beneath? Was it you that said that about identifying which ones are coming off of the software that we're working on? Somebody said that on the Monday.
Yes, that was me.
Yeah, that was you. Yeah, okay. So a lot of that is doing pattern recognition, and one of the things that it likes to identify is that harmonic type a pattern. We've been working on it for quite some time on our own. So we've been working on it, and we're looking at the possibility of even partnering with somebody who has it developed that is accurate. So one of the things with patterns, with harmonic patterns and things like that, is all of them aren't equal, because all of them don't identify the patterns in the same way with the ratios the way they should. The SmartTrader, let me see if I'll put it on, because I got pretty much the entire package. So if we go here and we go on smart patterns and I scan for smart patterns, you can see right here, right, that it identified a pattern within this move. Okay, within this smaller wave. So if we scroll back, right, you can see these patterns that it's identifying. Okay, so like this is you see here how now patterns. The reason why we teach the Fibonacci ratios, right, the way we do in the ABCD pattern, the way we do, everybody, is because all of your Fibonacci ratio, your harmonic patterns are derived from Fibonacci ratios. All of them, right? So when we came together to form the group, we like, if we help people and train them on understanding the ABCD waves and how it moves, and how, your C becomes your new A and D becomes your new B. Once you see that, you can't unsee it, and you understand these things a lot better, right? So that's why we teach it as a foundation. Can everybody see that that's an ABCD wave right there and a reversal, right? No matter what the shape that creates the different name to the pattern, right? Joy, you don't use them on a lower time frame. Yep, because they have the ability, right? The lower you go, the more volatile it is, and it has the ability to repaint itself, right? To repaint itself. And I'm gonna go over why here in a minute. So, right, you can see here, look at here. So this is a Gartley, Max Gartley. All it's adding is the impulse leg to X to A. Does everybody see the ABCD wave that occurs afterwards? Okay. So what changes the pattern are the varying degrees of the ratios that it hits, the targets that it come in. So, for example, I'll draw up here a Gartley pattern, right? You see, look here. Okay. All right. This one is a little wild. This is does this one called out? I don't even know. But I'll show you guys why we teach the way we teach and how you can easily pick up. And if you use a scanner, how you can take advantage of it. Okay, so if we have, okay, because all is really adding to the ABCD is the impulse leg. Okay, when we think about it. So let's draw it up. Okay, everybody cool with me doing this? Yes, no?
I'm
Yeah,
here with you.
please.
All right. Okay, cool. Because sometimes people are like, man, one time I had a guy was like, can we just move to the setups? I was like, okay, whatever. But so let's talk about a Gartley, right? So you're gonna have, I'll draw it up first and then we'll just draw it. We'll draw the pattern over top of it. Okay. So let me see how I'll do this. Like this. Okay. So the way this works is that you have an impulse leg, right? The people that used to be in IM used to hear him say that all the time, right? Especially Christopher Terry, impulse leg. And so I learned a lot from there in regards to this type of trade. Like he knew what he was talking about, right? Because that led me to a lady by the name of Jody Samuels, who uses these to trade reversals, which that's in essence what we do, everybody. You're gonna see what I'm talking about. So you have an X to A leg, that's the impulse leg. And to me, the best way to instead of learning these on your own, like you're staring at the chart, right? Because it can lead to a lot of subjectivity. If you use harmonics, use software. Let the algorithm work for you. That's my best advice. So you have this X to A leg. So this is our X, okay? X to A. Because I know when I was in, when I was with IM, it was like, kind of like a badge of honor. Like I can identify patterns on my own. Just use the software. But anyway, because what was crazy is that I don't know if you guys have studied like a lot of prop firms and like trade floors and things like that, like big time. But they have software when they walk in the morning that has, whether it's stocks, you know, currencies, whatever. They have scanners that identify potential setups for them. I don't know if you all knew that. A lot of people probably do. But they have software, like they have mega software that they spend millions of dollars on to identify setups, especially when they're a successful trader and they've made it big. You better believe they're going to find a program to find their ideal setups that they like, that can program it to do that. Okay, that's just smart. Okay, so but you still need a foundational piece, and that's what we teach. That's what we think is so important. So you have an X to A leg. So think about this. It then works off the ratios to form the patterns. So with a Gartley pattern, X to A, think about it. It's an AB boundary. Follow me now. And we always say that when you get a harmonic pattern, it's a fight, right? That's what the chief taught me at MTI. It's a fight between the bulls and the bears between the AB boundary most times, most patterns, okay? Somebody's got to win. So with this pattern, with a Gartley, so this is a Gartley. Gartley pattern, okay? And we'll just cover this one for today for a second. Okay. So this is my X to A leg. In essence, your AB. Right? And you hear me say sometimes like, oh, this looks like this might Gartley. Well, this is what's happening. You're getting, and think about what we teach in regards to the fib sequence. You get a 618 pullback. These are the rules. Okay. These are the rules. Now, we got a 618. Everybody drop me a 1. You see that? Let me know you with me this morning. We're going to work this out. Try to simplify this. Okay. For this pattern. You get a 618 within the AB boundary. And we say, well, we got a 618. We expect a 1.618 D extension. All right. Well, what happens is you've got a fight going on. So you add this extra caveat. So I've got a 618. Now what happens is price is going to start to reverse at what is a B boundary. Now, you guys know, especially on those larger moves, we'll say, we'll be conversing and say, Ryan, drop that fib from the top, right? The top of that retracement. Bang. We got an AB boundary there. And we say, well, let's see what happens if it pulls back, okay? It takes off from the 618. And look, now you have to measure this A to B leg, okay? Bang. Like that. So now you take this A to B leg. So look, X to A to B. Now what we want to measure is this move here. How does the fib sequence work the way we teach it? A, B, this sub fib, we're going to look for this C, because what happens is price is going to fail initially off this bounce to break to that 1618. Instead, what it does is it pulls back. And the range on the Gartley, let me take this out. So we know here we've got a 61.8. So that X to A leg has to be a 61.8. X to A, 61.8. Follow this closely. You just say, I actually already know a little bit about this. So you get this X to A leg, 61.8. That's right here. Now you have to take this A to B leg on this retracement, right? Which we call our B to C move, but this is an AB when we talk about a harmonic pattern. So think about it. It has to, the range for the Gartley pattern on the retracement of this A to B leg here has to be between the 382 and the 61.8. Okay. So between 38.2 like this, 38.2 0.2 and do it like this. And it's 31.2 to a 61.8 retracement. Does everybody follow me on that? Has to be between a 382 and a 61.8 retracement of the A to B line, which is in essence our B to C move.
Is that what the measurements be when you see like the examples? Yep. Okay.
Yep. Exactly. You guys already know it, right? So look, this is why it's so powerful understanding the fib sequence. So between a 382 and a 61.8 pullback. So let's say it goes to the 61.8 like this. And you're like, it's going, right? And then what has to happen? Okay. So we know that this is a 61.8 pullback. So I'll move this out of the way. Okay. And then what happens is the bears win and it pushes for a deeper retracement like this. Boom. Still within our AB boundary, right? The X to A, what we call our AB boundary. But then it comes down to a 786 retracement of the X to A leg. Right? Like this. Right? Like this. Now we know it can move sideways or whatever, and then it looks to reverse out on the correction. Boom. Okay. So it'll be, oftentimes it'll be here, and it can actually move to a full 1.618, right? Of this price action here, like so. It can. So it's a range again, right? I think it's like the way they have it is like a 113 to a 1.618D extension is the range. Is how they have it. So like a 113. So we know we have so like here, if we pull this out like this, okay, and it says like we used a 118, right? And that's going to be varying based on what, everybody? Think about it, follow it, right? If we get, sometimes we know if we get that shallow retrace, that 382 or just before that 382, we know that price could do what? Bounce and come back, right? So it has a range on this leg here. But in essence, you look for it to react around that 127 zone, right? That's 786 level, I'm saying. Let me take this in. Okay. And hold on. So keep the way we have it. Like this. Right? And then we look to reverse out, right? Typically, we look for that 786 of that X to A line. Okay, is what I like to see on the guard. Right? So 382 to 61.8. And then this C to D can be like a 113 to a 1618. So what I look for is right at that 786 zone right there, because this here, right? So like this point here, this X to A, like this is typically a 786 pullback. It's where that usually falls. Okay, when I see it on the graph, it's like that. So from here to here, right to this D point is usually at around a 78.6 retracement on the Gartley pattern. Okay, 78.6, right? So where the C to D leg is a range from a 113, they say, to a 1.618, typically you see it settle down around that 786, that X to D is around a 786. And then you look for a reversal, right? So look, X to A to B, right? Hold on. It's a doubling up. Hold on. Let me get this other one off. There we go. Now, okay. So technically, right, based on the pattern, this is think about it now, okay? So we got this out of the way. This is our pattern, okay? Now, what happens if this is an ABCD wave based on on the harmonic pattern? This is considered an ABCD wave. Think about it. After ABCD wave is complete, okay, and it is based on this pattern, the way it's drawn up for the pattern, for the Gartley. Somebody tell me, once a D is hit, our C becomes our new what? And our D right here becomes our new what? B, right? So guess what? You see how right here these targets are set? You see that? And you know how we say a new AB boundary and we draw that reversal? Okay. Where do you think we got it from? Okay. It's a combination of what we learned from NTI in regards to the sweet spots on the counter trend trade, right? And my experience with the harmonic scanner. Because guess what? Our C becomes our new A, our D becomes our new B. And how do we send these setups out? We send it out just like this. We don't use the 50. You can if you want, but we use the 382, the 618, the top of the A boundary, because our C becomes our new A. That's TP1, TP2, and TP3, right? So TP1, okay? TP2, TP3, right? Let me tell you, right? Now look at where, I'm gonna move this out of the way and I'm gonna show you how this harmonic scanner the harmonic scanner and smart patterns, where I'm gonna show you where they set their stop, okay? And see if it falls in line with what we tell you guys. You see where that stop loss is on there? Okay. Do this like this. Look where they're setting that stop at. Right smack dab in the middle of the zone. But what we know, right, because of the nuggets that we were taught from our mentors, is that if we recognize that the price action, so it sets the stop right here. But what we picked up on from our mentors is if we identify that price comes around this 236 and it makes a shallow retracement, where does it have a high probability of going? To that zone. And this is why a lot of times people get tagged on harmonic patterns. From that bounce, okay? So what do we say? We say either use additional confirmation, utilize trend line breaks, utilize the cloud, right? If you run tight stop losses, some pattern scanners will put that stop here, right? That's all based on the programming and what they create. Some will put that stop right up underneath that D. But that's the same as what we tell you. Hey, if you take it off the AP boundary, you can put it underneath that level. Just know that with a tight stop, you run a risk of getting stopped out more often. If psychologically you're good with that, then it's okay, right? You're good with that because you're looking for that asymmetric return where I'm gonna get stopped out. I'm gonna lose a high percentage of trades, but my one runner will make up for all those trades and put me in profit. That's what happens if you use tight stop losses. Or you can lower your lot size and widen it, right? So think about it. We say, hey, put it, below that 127, or we say put it at the D extension, trade smaller, because we know. And then if you wait, right, if you don't play the B boundary and you wait for it to come to this 127, right, it still puts you in a positive risk to reward. So that's 10 pips back there to that TP1, that's 20 pips. That's pretty much a 2-to-1, right? So that part you have to figure out for yourself. But the whole gist of understanding, right? So we will draw up a chart to say what? Shallow retracement, move up. Okay. Now, don't we do this every time we post something with a new AB boundary, right? Or we'll say, you're gonna get it. You can either go right now, right? Right now. Off the B boundary, off the 118, 127. Or we say, when it gets to your sweet spot, think about it now, what we cover. When it gets to your sweet spot, say okay, well, on these type of plays, I don't want to play the B to C move. I'll only play it after a shallow retracement and it hits the 127 zone. We say, what else do we say you can do? We say you can wait for the low to form, wait for a trend line break or a cloud break, put your stop below that low. Right? So in essence, either below the low here once price reaches this level, or below the low there. Right? But we know, right? We eliminate this stop because we know that price can come down to this 127 zone and react. It can react. So then, if you all remember, right, what scanners do, oftentimes it'll give you, right, like how I draw it up, right? A lot of times, right, you'll see me post and I may say, right, the minimum and the maximum entry zone, right? Position 1, entry 1, entry 2. Do you have to take both? Nope. You may take one or the other. Right? And you see me post stuff like this. right? We're looking for price to react, right? Somewhere in this zone. How many people have seen me post that as a setup opportunity, a trade idea? Right? Because we're looking for a reaction. So what harmonics do, right? We're adding an additional extra A leg, right, for the pattern completion, is giving you a high probability reversal zone. In essence, that's what we trade. Now, if you're in a uptrending market, and if this is my AB boundary, and if they, a lot of times patterns get called in consolidation, you have to play them as they are. Sometimes patterns get called and it's a true correction, like it's a downtrend and it's calling for a buy. You look at the overall from the top down, it's a downtrend, it's calling for a buy. Hey, I know that's probably just only going to correct to a certain level and then continue down, right? We're moving down. Overall, we're making higher highs and higher lows. But there are times where you catch harmonic patterns being called with the trend. So what you know at that point is this may go beyond TP3, and because I got a 786 retracement, it may carry on to this 127. Right? So that's just things that you pick up over time. But these patterns, so if we go back out and we go to somewhere like the 4, okay, and we'll put on, we'll scan for smart patterns. Yeah, see that? You also know how to play that now. This is a butterfly, okay? Different ratio. You see how it pushed down beyond that A? But at the end of the day, this is what you're looking for. Look. See where those TP levels are? That 38, the 38.2, that's 61.8. That's the move, right? So it becomes the same thing that you see as post, right? The same thing. Look. See that? Right? And then you're putting your stop, right? Now that stop management, we give you guys options. That's gonna come with what you're comfortable with. I love leaving it. I like leaving it wide, right? Because I'm super busy, and break my risk up and let it do its thing. So how do we draw that? How do we draw that pattern up? If you've seen this come through, right? You won't see this. You'll see this leg because this is what matters for the reversal. Everybody follow me on that. Drop me a 2 in the chat. Right? This is all we're focused on is this leg. This is what's dynamic, right? This right here, okay, that's cool. The software found it. This is all I care about. It's finding a reversal point, and the software is identifying that for me. High probability reversal zone. Okay. Some people not harmonic patterns, but you gotta know what it's about. That's why we teach Fibonacci sequence the way we do. Because once you get that, you got just about everything else that's out there. It's all gonna go back to Fibonacci ratios. I don't care what anybody says. So now you have to decide, hey, how do I want to play? So we'll send it out because that's really all we can do, right? We're looking for a reversal. Right. So what we're looking for is right, a move down. You see how when we say literally it's the same thing over and over again, no matter what you're finding or identifying, that's what we mean. Right? Or we look for the push up to the zone. Okay. Ideally, if I'm leaving my stop wide at an extension, right? Because the way I look at it, if it don't hit that extension, it's gonna correct. So if I leave my stop wide at the extension, my ideal spot to take the trade is in this zone, right? If I'm gonna leave it at that extension, right? Is in that zone. Okay. Otherwise, you can adjust your stop, right? Now, the other way, okay, everybody follow me on that? Yes, no, I want to make sure to take our time with this morning.
Yes.
Okay.
Oh,
Awesome.
yeah.
We got a hand raised. Who's that? Michelle?
I'm so sorry. That was a mistake. I was trying to say yes.
Okay, cool. Cool. Got it. Right. So
I have a quick question, Benny. Does it matter? So does the butterfly always look this way before it goes into a reversal, or do the wings flap a different way when it's gonna be?
It's gonna give you a range, typically like how we went over that Gartley pattern, where some aspects of the pattern could be within a certain range in regards to the correction, right? So so I'll show you guys something real quick. So and how this works, right? Because the price action, drawing stuff all over the place. Hold on. Take this off. Because the price action is going to determine, right, what the pattern becomes. Oh, my chart is sticking. So if you take this tool, right, and you look at this like X to A to B, you see how it started? You see how it's starting to shift based on the correction and the pullback, right? See that? See how that can change on the varying ratios, right? So it can push, like you see how it's in this Gartley range, and then it goes to the max Gartley. Then as it moves up, it becomes something else. It becomes another pattern based on the retracement, right? So let's see. See how you pull that there and it's changing, right? So it all comes down to Fibonacci ratios. So it'll stay, it'll stay a butterfly pattern or whatnot as long as it stays within a certain range in regards to the ratios. Then it'll shift to something else. What you have with some patterns and where people get caught up in why a lot of times it'll do it, and if my stop is wide, I'll still get away with the setup and winning the trade. Keeping my stop wide is because sometimes you get scanners where it repaints itself constantly, and you see why it does because of what I just went over. If price continues to move in a certain direction, it could change the pattern. So people will be like, "Man, I was messing with this scanner, and it kept repainting itself." But think about it though, why it does that, and why we teach you guys from the very foundation about swing lows and swing highs, right? Is because if, all right, let me clear this out and leave a pattern on like this. The reason why scanners repaint themselves is because it's really like a pending pattern. Anybody want to guess what completed this pattern? What made it, right? This last leg here, what made it complete the butterfly or whatever it is?
5-candle formation.
That's it. It formed a swing high. So that's why we harp on that, because if price continues to move up, right? If that second candle to the right would have pushed higher, guess what it would have done? It would have expanded the pattern. And it would eventually became something else, another pattern. Or what happens? The pattern invalidates itself. So if you ever use a scanner, then like, man, what happened to the pattern? It disappeared. It invalidated itself because it was pending until that swing high, that level got completed in the zone that it needed to. Now, that's the butterfly pattern or whatever it is, right? Now that's that, right? Here, that's why we say, wait for those swing highs and those swing lows to form. So you may come in and you may say, oh, I have a pattern. Oh, be patient, wait. Because it may continue to push and to turn into something else. So no matter what angle you look at this from, it all goes back to the fifth sequence, Fibonacci ratios, support and resistance. Right? That's why. So then it becomes, well, how do I want to enter? Right? So this is where entry techniques come in and say, all right, I got this pattern. Let me drop down. If I like tighter entries, I've got time for it. You know what? Let me drop down to the 15-minute or the 5-minute chart and look for an entry, right? So here it is on my 15. You can already see it. So if I like it and I have time, okay, so if I bring this down here, oops, to the 4, this is a 4-hour pattern. And it's like, okay, I found a potential reversal. Let me go down to my 15-minute. Okay. Bigger. Okay. Oh, zoomed out. Okay. Here. Hold on. There. Okay. Here it is, right? So let me go down to my 15 and I'll start to monitor the setup. Like this. Okay. 15 or your 5. This is how I play. Okay. And this is how I taught it, right? When I was with the other company. It's just like this. I drop down through my time frames, whatever you like, 15-minute, 5-minute, however. Okay. And I picked this up from studying Jody Samuels. All right. I first heard the name through Christopher Terry. Because all I'm using the harmonics for are reversal zones. So, okay. I found my reversal zone. Like this. Yeah. Now I've got my target. If I want to use that target, I've got it. Okay. 2, 61. Okay. Now we mark these out as targets, right? Based on that. This is how we learned it, right? All of this stuff comes together over the years, right? Into our overall philosophy, right? And how we train. Okay. So I've got that now. Now, yes, we have targets, but you could do this as, hey, I'm gonna take this as an ABCD wave, trend line break, pull back, ABCD wave, however you want to do it. Or you could say like this, because my stop, if I'm playing it like this on a lower time frame and I get that reversal, my stop's going above the A, just like this. It's going above the high. What do we say? The high prior to the trend line break. Boom. Okay, we've said that. So I can either look at it like this, and I'm gonna play pullbacks, or guess what you can do? Okay, we know we have these targets, and this is on every single setup that we set. You can say, I'm trading this off the break and it closed bearish. I got it. Okay. Regardless of these targets. regardless of the targets. Hear what I'm saying now? Regardless of the targets, I can say, I'm setting this up like this. Here's my stop above the high. Okay. Here's my entry off the trend line break, close bearish. That's a 24 pip stop loss. I need 48 pips. I want to put myself in a 2-to-1. Right? You can say I'm gonna do a 1-to-1, 1.5-to-1, whatever. I'm just using this for simple. So I'm gonna go 24 pips here. Okay. With this. That's my minus 24. Okay. And I need 48 for a 2-to-1. But that's what I'm using. Okay. 48 pips. What is that? 90, 34. So we'll do that like this. 90, 34. 90, 30. So 90, 34. Okay. Just beyond time. Yes, sir. All you need is a new AB boundary. Whether it's from a harmonic pattern, from running your smart fib, right? Like this here. All right, this is another one. This week was crazy. With work, internet, mess, right? But look. That's an AB boundary. Price turned over. You could take that same pattern and drop down to the 15 and the 5 and play the break on that. Play the cloud break on that. However you want to do it. Why? Because look, price from our top-down analysis, Janice is double topping, at least right now. That's a double top. All right. I remember what you asked me last night in the chat. All right. So look, price pushed up, it reacted at that level once. We pushed down, we failed to break. We did not break that 137.05 level. It came right back up to the top to retest that 151.90, which is the high, right? That's the high. If we zoom out, right? If we zoom out, that's the high. That's why I have that solid black line there. It's reacting at that level again. Therefore, you see these moves coming off the top. Look at that. So the question becomes, does that continue to break it down level? But look, through the levels. But look, all I need is an AB boundary. That's my reset, right? Whether it's off of a harmonic. Now, it's finding you patterns all throughout, because what? The market moves in waves. So if you put this on here, your smart patterns, look. Right? The issue, right? And we can be using this all the time for setups, right? For everybody. We can be using this all the time. The issue with and I've emailed them, called them about it, added a suggestion. The issue with the smart analytics and the smart patterns is it does not have a scanner. So it's not alerting you that, hey, either through email or text or whatever, or just popping up on your screen, a little box rectangle that's telling you, hey, there's a new Gartley on the 4-hour on the Swiss yen or a pending Gartley on the Swiss yen. It doesn't have it. So unless you're just scrolling through your charts, who has time to do that? Just scrolling through your charts is hard. Like, how do I find that? Right? But it's just all of this here, like this move here on this 5-0 pattern. This move here was what? It was an impulse leg that moved up like this here. Bang. See? Look. It's all Fibonacci ratio that is identified. Okay.
Let me ask my question. I'm sorry, I typed it and I'm like, no, what did I just say? So on the same chart, I didn't get all of the patterns that you have, like on that last leg, you have like several little Gartleys within, and I only have the one big one.
Do you have what's your settings?
I've never touched this a day in my life. So how do I change
Yeah,
this?
gotta check your settings. And then there is hold on. Where is what happened to, I have to find it. But there's I don't know why I'm not. It's been a minute on this one. Oh, confidence too. So you can put a higher confidence. So the higher the confidence, the less patterns is going to show.
Okay, because my confidence is at 80%.
Oh, it's at 80. So maybe it's probably calculating something different potentially on that. But these are all setups. Like I said, the issues, and then this one has this scanner. Higher time frames get a lot better, but it has the ability to repaint a lot. So you have to, all scanners aren't like that. Some scanners are like dead. It may make an adjustment here and there, but it's like dead on with the pattern from the beginning. This one can throw you all over the place at times on this one. Like it'll be this pattern, and you go back and see, we're looking at these like, wow, that gave a reaction. But this one might have been two, 3 different patterns before it settled in. Right? 2, 3 different patterns that it might have called. And then if you jumped it and it changed patterns, then all your alignment is off, like with your stop loss and everything. And then you go back later, like, this went from a shark to a Gartley to a bat pattern. And then it went like, but when I took the trade, it was a shark pattern. And I did my stop loss and everything off of that. So I don't use this one at all, really. Which is why we've been working on our own thing and looking to partner. Because it does have the ability to repaint, but have I ever done the research like over 100 trades taken, what the strike rate is? No, right? So that's something that you could test. But I would test it live because, like I said, this could have been 3 different patterns before it made this Gartley pattern and gave you the reaction to that 382 or whatnot before it took off. So that would be my advice on that one. That's why you don't ever see me with it on here. Trading with the scanner is a lazy way to trade? No. Not a lazy way to trade. I think it's lazy when you actually don't learn the fundamentals of technical analysis and fundamental analysis. I think you should learn that, right? So you know, but to use technology. Look, I have a remote. Does everybody on here have a TV remote? Because maybe I'm aging myself, but I remember when it was not where there was not a TV remote. I remember cable TV where there was a long cord attached to the cable box.
Do the kids count when you call the kids and get the remote? Do that count?
Right. Yeah. Right. So, like, I mean, we use. Look, you can either go on MT4 or TradingView and draw these fibs manually, right? And draw these fibs manually, or you can use a smart fib. So that's a good question, Carolyn. I don't consider it lazy at all. I consider it using technology like Chat GPT. Like, you think I haven't used that for some of my workflow? You better believe it. Right? I can't turn the TV knob. So it's adapt or die, right? It's adapt or die. But I think you still, just like people who are out here creating trading algorithms, in order to get to and program an algorithm and set up like a trading bot, you actually have to know how to trade. And I think that's where people fell into the trap. Oh, just sit back and take the signal, right? Turn your phone into an ATM, all of those shenanigans. And that's marketing. That's what marketing is supposed to do for people who don't know that. That's what marketing does, right? I remember when I put my first pair of Jordans on, I thought I could dunk. But I couldn't, right? That's marketing, right? And the reason why they do that is because you become attracted to it. We do it. If we weren't attracted, they wouldn't do it, right? We're drawn to it. So in essence, they're giving us what we want. So you still have to do the work, right? We have to learn the foundation of trading and take advantage of it. Right, exactly. Right. And that's what I kept trying to, when I was with the other company, that's what I kept trying to impress upon people. But nobody would really listen. Everybody wanted to turn their phone into an ATM. Had to bounce. Right? Wouldn't listen. When you would go back and look at it's the same thing here. When you would go back, when I was in the other company, you would go back and look at the training modules and look at the percentage of completing of members. Hardly nobody completed the training. It's the same thing here with us. Hardly nobody completes the training because you can see it. You can see the time spent. Right? But that's why we think the live sessions are important, because at least hopefully people will show up for the live session and maybe you can learn some things during a live session. But ultimately, if you want to be a professional trader, if you really want to be consistently profitable, you have to learn. I mean, you have to learn. You have to learn. Right? Same thing. Riding a bike, driving, walking, crawling to walking. You have to learn some foundational things. So, but hey, it's been a great session, everybody. Any questions before we wrap things up? I hope this really helped everybody, that no matter what, it all comes back to those basic fundamentals of the fib sequence. Questions, comments, thoughts before we wrap it up?
Nope, I can't wait to rewatch this. But low key, while you sitting here, is that a Head and Shoulders right there?
You talking about the smaller pattern?
Yeah.
It probably is. Or you go down to the lower, you go down to the lower time frame, it's probably really showing up big time. The what's the name will show it all the time. I don't think it picked it up on here, but it'll call that smart patterns will call like a Head and Shoulders and crowns and all that stuff. There's options for that. But that looked like it right there. I would say so. Look how it reacted at that 150.49, both shoulders, and we just broke neckline.
Okay, because this moving in between my trend lines, and I'm just not trusting Chef JP Wildness. Oh yeah, I don't know why.
Oh, I know. Well, I mean, listen, everybody gotta understand too. We're trading through some pretty back and forth times, I'll say. It's not that's why I really stick to the framework, because that's what helps me get through these type of situations where you get mixed data. You get a lot of mixed data from the market. But at the end of the day, it still moves in waves. That's what I've learned over the years. That's why I've stuck to it and haven't really, gone away from it. And just looking for those reversal points, right? And so those patterns help you small. Those harmonics, like you guys saw that, like those harmonics that will find moves within the larger moves, right? Because it's all moving in waves, and you can take advantage of it. So, all right, everybody. Hey, we're gonna wrap this up. I am out of town tomorrow and all through next week, and so Ryan will be back on, so we won't have the weekly ritual. And I believe he said he's gonna pick things up back up on Tuesday for the pre-New York session. So I know he sent out a communication on that. So I am about to get out of here. So go on, hit the high seas for a little while. Michelle, awesome. Appreciate all the feedback, everybody. So everybody have a great rest of your day, great weekend. And I'll see you all when I get back.
Enjoy yourself and get some rest.
I will. It's been the first time we've taken a major family vacation since before the pandemic. So we've been rocking and rolling.
Kids. Look, don't have too much fun to lose the kids.
And going on a Disney cruise, they can run off with Mickey Mouse or whatever they gonna do. Take care, everybody. Bye for now.
Bye-bye.